Hi guys, a very good afternoon and welcome to the CNBC-TV18 Mumbai newsroom. I'm Pavitra Parekh. You're tuned into your stocks, and for the market we definitely have ourselves a down day, but we have come off the low significantly. So currently looking at around a 120 point cut. It was really Reliance which took us a little bit to the day's low at the beginning, but it is also Reliance which has powered us back up and sort of recovered the market. There you have it on your screen. You can see that chart, and we're back significantly in the green right now, and the markets also have recovered. It is the mid-cap index all of today which has been holding up quite well, around 0.7% higher. So that part is looking good, but the banks as well under a little bit of pressure, around 250 points in terms of a cut that you're seeing on the Nifty bank. We have a whole lot of queries. This is your stock, so let's get straight to them by inviting first both of our guests on the show. We have Ruchit Jain of iPaisa.com as well as Vijay Chopra of EnochVentures.com to answer all of your questions. Ruchit as well as Vijay, thank you very much for joining us and taking out the time to answer all of these viewer queries today. Let's get on to the first one then. We have K. Narayana Reddy, who writes to us from Warangal. He holds 2,500 shares of SBI, which he bought at 400, and he also has 100 shares of L&T at 1950. He says that he's a long-term investor and wants to know whether he should hold on to these investments or he should sell and maybe try something else. Let me come to you first, Vijay, on this, since he is a long-term investor. SBI, of course, has already seen quite a rally. It's, over 600 in the past 6 months. It's seen an over, 30% kind of rise. Do you think there's lots more that can go, well for SBI from here?
Good afternoon. Thanks for having me on the show. I think that, there is a very small amount of steam left. I think that SBI has a good possibility it can touch 620 and 630. That would be the level where I would recommend profit booking. Otherwise, keep a stop loss of 590 and keep on holding it. The other stock he mentioned is L&T. I think that, L&T profit should be booked at these levels. There are plenty of other opportunities which are available. L&T has run up quite a bit, and I think that it should correct a bit, and once the correction happens, probably you can re-enter into L&T. But as of now, I would recommend that exit L&T, book profits.
Okay, exit L&T and you can book profits. Ruchit, let me ask you also on both of these stocks. Like we were saying, SBI has already run up quite a bit. Even L&T, of course, has seen quite a rally already. The question is, how much more can we see from here?
Yeah, hi, very good afternoon, Pavitra. I think yes, both the stocks have already seen a good run-up, but since this question is more from a long-term perspective and not short-term, I think my advice would be to continue holding both the stocks, specifically the PSU names and the PSU banking space in last 2 or 3 months have witnessed a good buying interest, and the kind of volumes that we have seen in many of the PSU banks, I think going ahead from a mid to long-term perspective, the stocks have already seen a bottoming out process and they are into a good uptrend. So you might see some short-term consolidation or near-term corrections because of these overbought setups. They have seen a good run-up already. But from a long-term perspective, I think the stock should continue to do well. SBI, if I look at the monthly chart and put up some reciprocal retracements, the targets are coming around 750. Maybe next 1 year's point of view, you can hold on for targets of 750. And even Larsen & Toubro, I think the stock has potential to go towards the 2500 to 2600 range in the next few months. So from a long-term perspective, my advice would be to continue to hold and ride the trend in both these names.
All right, that is on SBI as well as L&T. The next query that we have comes in from Manjeet Kaur Soni, who writes to us from Chandigarh. She holds 100 shares of Escorts Kubota at 76 since November 2005. She's a medium-term investor and wants to know whether she should hold or sell the stock. On Escorts Kubota, Ruchit, it's already done very well. In fact, even the tractor sales that we just got, for November were very good. How is it looking on just a technical basis?
Technical chart structure is positive. In fact, last 1 month, if you see, in spite of many of the auto names have not participated in this recent up move, but Escorts have continued to do well. But my advice would be to keep some trailing stop losses and hold. The 20 days exponential moving average is now around 2170, which from a short to medium term perspective is a good support on any kind of declines. The momentum readings have reached a bit overbought zone, but it needs to be seen whether after these overbought setups, whether it shows some time-wise correction or price-wise correction. But ideally, as of now, it would be good to hold on to the stock with a stop loss below 2170.
All right, hold on for now. Vijay, coming to you on Escorts, like I was saying, we just got the sales figures also for Escorts yesterday, and it's looking quite good. The tractor sales are up significantly. Do you think much of it is already in the price?
Well, I think more or less, yes. I think at the max, I think it can touch 2400. But I would recommend that, booking profits at these levels is not a bad idea. When the markets are giving you lots and lots of opportunities to get into, there are good metal stocks you can buy. Stocks like Hindalco, Tata Steel, Hindustan Copper, National Aluminium. These are great companies to get into at these levels. So better book profits because we might see some shake-up in the market as it has run up quite a bit. So I'm also expecting some kind of a profit booking, and that would be really quick. So when profits when profit booking happens, stocks fall, they tumble down, and then you don't feel like booking profit. So it's always a good idea to book profits in a good market. So keep on booking profits is also keeping on booking profit is also a good strategy. So I would recommend book profits and get out. There are other opportunities as well.
Vijay, for this entire auto space, we've actually seen quite a lot of gains come through in the recent few weeks. Do you think this is true for pretty much all the auto names, that much of it is already in and there's not too much of a rally left?
Pavitra, the best season for autos is gone. So, generally we see August onwards, the sales pick up because of the festive season. And generally the harvest happens and all the, farmers have a lot of money in their hands. So rural sales pick up. Two-wheeler sales pick up. Even in the urban areas, people buy during Durga Puja and Diwali and Dhanteras. So there's a lot of sales which has already happened. So I am expecting a correction. It's not like that, the sector is bad or something. But yes, correction is due. And corrections make any sector or any stock, investable. I think it becomes healthier. So booking profits is also a good idea. So keep on booking profits.
All right, keep on booking profits. You've already made good money on this one. The next query is from Sanjeev June, who writes to us from New Delhi. He holds 200 shares of Mindtree, which he bought at 3,000. He's a long-term investor and wants to know the prospects after the merger with L&T Infotech and, what the combined entity could really look like. Mindtree, by the way, currently is at 3,433 and he got in at around 3,000 rupees. Vijay, coming to you on this one, how does it look for the merged entity, Mindtree and L&T Infotech?
Well, I think that LTI is a great investment even at these levels. At 5,100 odd, I think that this stock has the potential of reaching 7,400 again. So my sense is that, LTI is a great company. And so whatever the scheme of arrangement is, he should stay invested in LTI and Mindtree. IT is just coming out of the cusp, and I think that IT should do well with another year's perspective. So LTI, which eventually he would get an LTI share, is a good buy and a good investment.
All right, so this is a good investment. Ruchit, coming to you on this as well, do you agree? Do you think this is a good investment at these levels?
I think yes, certainly. Even technically the structure still remains positive. The high top, high bottom structure has been in place. And even what we have seen at the IT after that recent corrective phase of last few months where the Nasdaq was correcting very sharply and our IT stocks too have reacted to that. So of late, the US markets have also started forming that high top, high bottom structure, and the Nasdaq index has too have also seen a very good pullback move. So I think our IT stocks would continue to do well going ahead. We may see some short-term corrective phases, given that many of the IT stocks have already run up. But LTI chart structure remains positive now till it is above that 4,700 mark. So my advice would be to continue to hold on. Can expect targets somewhere around 5,400 in the short term, and 4,700 to 4,800 should be the good support range on any dips to add more positions.
All right, got it. The next query comes in from Radha Madhav Pogaru, who writes to us from Chennai. He holds 20 shares of Aditya Birla Sun Life AMC at 712. He's a long-term investor and wants to know whether to hold or sell the stock. Ruchit, coming to you on this, this is a stock which has seen a steady decline. It has actually never gone back to that listing IPO price at all. Do you think there's a chance that if he stays invested, he could recover some of these losses? How's it looking?
Well, I think rather than keeping hopes to recover the losses from the same name, it's better to exit on any kind of pullback moves and look for some opportunities in some other better names, which could deliver good returns in short to medium term. So the trend still continues to remain negative. The low top, low bottom structure has not changed yet. Even if you look at the last 2 or 3 months, when the broader markets now has also started participating, but still we have not witnessed any kind of buying interest in this name. So I think given the underperformance, it's better to look out for some other opportunities where returns could be made and this loss could be covered somewhere else. So my take would be to on any kind of pullback moves, the 200 EMA is around 460 to 470. So ideally, if we get that levels around 460, those should be good enough to take an exit from it.
Okay, so maybe exit this stock once it does hit around its 50 DMA. Vijay, coming to you on this, do you think that there's a chance he could recover some of these investments? He's staring at a pretty steep loss on this one, but like we were talking about it, it's seen quite a cut already.
Well, I think that, if he wants to stay in the same space, AMCs, HDFC AMC is looking very good on the charts and even fundamentally. So, it has just seen a golden crossover happening. And I think that, we can immediately shift to HDFC AMC and then probably, recover some of his losses. I think that, the SIPs keep on coming in, the AUM keeps on growing. We are sitting at almost 40 lakh crores of AUM in the total mutual fund industry. And this doesn't seem to stop. So my recommendation would be that, exit Aditya Birla Sun Life AMC, get into HDFC AMC.
Okay, get into HDFC AMC if you do want to stay within this space. Vijay as well as Ruchit, we have to take a short break now, but I request you both to please stay on because when we come back, we have lots more queries. Back, you're still tuned into Your Stocks on CNBC-TV18 and we still have Vijay as well as Ruchit with us to answer all of your stock-related queries. So let's get back to that. Saju writes to us from Kochi. He says he holds 21 shares of Aurobindo Pharma at 718. He's a medium-term investor and wants to know what he should do with his investments. Ruchit, this is not a good-looking chart. It's down around 16% in 1 month. Do you think the downtrend is over for now?
Well, not really. As of now, there are no signs of that the downtrend is over. And even if you look at after this steep correction also, the recent correction from that 560 to 460 witnessed very high volumes. And usually whenever you see that price down move supported by higher volumes, those stocks tend to continue their relative underperformance. So I don't think that the stock would show any kind of trended up move, at least in the short to medium term. So since his view is only for medium term, I would advise to look to exit on any kind of rallies towards that 520, 530 if he gets. Then better to switch to some other names within the pharma space, names such as Sun Pharma or Glenmark Pharma. I think those looks much better on the charts compared to Aurobindo Pharma.
Okay, so Auro Pharma is not something that you think is going to recover anytime soon. Vijay, coming to you as well on this one, your thoughts on Aurobindo Pharma from a fundamental perspective? He can hold for a medium term, so at least a couple of years, I think, is what he's looking at.
Well, it has been a complete destruction of capital. It is not 16%. Since last May, I'm noticing that it is 60%. The stock has almost corrected 60% from the top. So I would recommend that get out of this stock maybe forever. I don't know, there is some problem with the company. We are not visibly able to see what the problem is. But I would recommend an exit. And there are other opportunities, as I mentioned, that I think that, textile is doing well, defense is doing well, metals are doing well. Stocks like BEML, even housing companies are doing well, real estate is doing well. Today, we heard that, the Bombay Municipal Corporation has reduced the charges. So I think that, Bombay Realty should do well. Companies like Ajmera, Oberoi Realty are good. So there are other ways and other companies to invest into and recoup your money. So I think that Auro Pharma has been a complete disaster and get out of this company.
Yeah, so often with these investments, you just, because you're late to act, you end up losing so much money. And it's 16% in just 1 month. That's what I was pointing out. But of course, the stock has seen much steeper cuts throughout as well. The next query that we have comes in from Praveen Kumar, who calls us from Bangalore with a query. He has investments in MTAR Tech. He's actually on the line with us now. Mr. Kumar, good afternoon. Thank you very much for writing into us. And you have investments in MTAR Tech. So take us through your query. Both of our guests are on the line as well.
Good afternoon. Yeah.
Please go ahead. What is your query on MTAR?
Yeah, I got this 15 shares of MTR about 4 years ago at 2,000. So okay. 2,000 plus. So now it has fallen by more than 25%. Should I exit totally and get into some other stock in any other sector is okay for me if I have to exit.
Okay.
I held it for 4 years already. I don't see any side horizon.
Okay. Are you a long-term? So you're still willing to hold for a while, right?
I can hold for 2 years, but already 4 years over. If there is a chance, it's good. I don't mind holding it. If the experts say that I can hold it.
Okay, let's ask our experts then. Vijay, what do you think of this one, MTAR Tech? Of course, this has also seen quite a lot of, destruction of wealth.
Well, it has, but today, as we see, it is showing a lot of resilience.
Yeah.
I think that there's some PLI scheme which is coming for drones. So this company is also into defense. I think that India is on the way to become a defense hub for the, at least for the Southeast Asian countries, or even the poorer countries. So maybe if they cannot go to France or UK or US to buy expensive arms and artillery, they would, come to India. And India has delivered in the past. We have seen what has happened to HAL. So I think that, he should stay invested in this company. Keep a strict stop loss of 1500, although. I'm giving you a bit deep stop loss, but I think that the stock has shown even lower levels. So keep a stop loss of 1500, stay invested. There are good chances that it might come back as well.
Okay, good chances that could come back. And this defense theme has really been in focus, right? HAL is one of them, but so many others like Mazagon Dock also have been doing very well. Ruchit, the high for this stock was around 24.50, 24.60. That's why we saw the high. So from those levels, it's definitely seen a sharp correction. But do you agree with Vijay that it could sort of trend back up?
Yes, I think couldn't have been a better day to answer a question for MTAR Tech, because today itself we have witnessed a good breakout from a long consolidation phase in this stock, and then too, if you look at today's volumes, then it is much better than what we see on a daily average basis. So good breakout with good volume should lead to a good momentum in the short to medium term. And what if I look at the positional chart, then the initial resistance for come around that 2000 to 2050 range, because that was the point from where the stock corrected sharply in the month of March. So it's more or less around, I think, his buy price as well. So I think he should continue to hold on at least for his cost price. When it comes in that range of 2000 to 2050, it would be better to take a review again over there.
Okay, hold on for now. That is the word coming in from both of our guests. So, Mr. Kumar, I hope that helps you with your query on MTAR. I know you've seen significant losses come through, but there is a chance of a good revival over here. The next query also comes in from N. Ramesh, who writes to us from Hyderabad. He says he holds 4,800 shares of Vinati Organics at 3 rupees per share. He's a long-term investor and wants to know whether he should hold or sell. What do you think of Vinati Organics, Ruchit?
The long-term chart sector is still positive, although in the last few months we have seen some sideways move where since the start of this calendar year the prices are trading right where it is right now. So I think this on the long-term chart seems more of a time-wise correction within an uptrend. And if I look at the monthly chart, then the monthly 20 EMA, which is now around 1875, is a very crucial support. Until that is intact, the trend has not changed. So keep a stop loss below that 1875 and continue to ride the trend.
Okay, that is on Vinati. By the way, I'm a little bit confused about this buy price. 3 rupees seems unlikely. But anyway, Vijay, let me ask you just on this stock, how do you look at this one?
So if it is 3 rupees or even 30 rupees, I would say even 300. Even 300 is not bad. So keep on holding. He has held on to the stock for such a long time. And if you don't need money, don't get out of this company. There might be certain corrections, and corrections make a stock healthy. This is for traders, but for investors like you, really salute the kind of patience you have shown. I think that if you keep on holding Vinati, who knows, it might go to even 4,000. So just keep on holding. You bought it at a wonderful price, and if you don't need money, don't exit.
Okay, if you don't need the money right now, don't exit. The stock has whipped out some crazy returns, if you did get in at those very low levels. Vijay, Ruchit, we're going to leave it on that note today. Thank you very much for taking out the time and answering all of our viewer queries. So that is what we're answering in terms of, queries today. For the markets, it is still a 120-point cut that we are seeing. So we've definitely come off the lows quite well. It is really some of these metal names which are doing well. And of course, the oil and gas space, because of what's been going on with the windfall tax. It's, for example, on petrol, it's cut by over 50%. So that one is looking very good. The likes of ONGC, Oil India holding up well in this weak market. You also have something like a Tata Steel, which has done very well. In fact, this entire week has really belonged to the metals pack and to the real estate stocks, because, just those two indices, if you take a look at it, have seen a gain between 3.5% and 4%. And of course, Reliance has been doing very well. Today also, it is, it has recovered significantly. For the week, it's up almost 5%. But with that, we're going to wind down on this edition of Your Stocks. Thank you very much for tuning in, and stay tuned because closing bell comes up for the last hour of trade.